YouTube, what's going on? It's your boy TerrenceRe. Uh, Getting ready to do a stock market little update with you. Talk about little stock of the day. Got some news. Got a nice trade going, and we're gonna talk about that and a little bit more right after the buffer. Right now, we got the spools are up, with the S&P 500 futures are up about 45 handles. It's about 1%. Got the Nasdaq futures up about 1%. The Dow futures almost up about 1%, and the Russell about the same. The market opened up this morning, and it's continuing. So we got 1, 2, 3, 4 up days in a row. If you're looking at the screen, let me take these indicators off and just make it a little bit easier to be seen. You can see we got 4 up days in a row. And what I did was this morning, I got a scan down here, a little scan that I run, fast mover scan. I close this up, and it's just showing some stocks that little scan that I do. Got 10 stocks on here that are moving on the day. Right here, you see Splunk. You can see it's up. I actually just now looking at Splunk, but the one that caught my eye was Carvana. And I went through and I liked what I seen out of the setup of Carvana. And you'll see that right here off of this bottom, this low right here of $19.45, we have what I would call like the start of a little impulse move right here, up, pull back, and this would be considered like for me a flag. And then we got this up move, and then we got to pull back into here. So ideally, what I see happening doesn't mean that it will, but I see this high being taken out. So with that being said, when I seen the this pull up on the scan, I got a little gap up right here. I came in initially. I wanted to buy a call. I did buy a call and then sold right out of it because I didn't want to, um, be on the clock. You need that move. You need that move to happen quickly. And since we already had a move, uh, already, I would have been late to the party. So I just closed that call right back out. I didn't. I think I paid 275 for it, and I sold right back out of it for 275. And then what I ended up doing was selling a put spread. I would rather sell premium. If we look up here, let's see what the IV rank is. So we look over here at IV, um, current IV percentile, 49%. So you know my rule, anything over 30 for, stocks. ETFs, I may break that rule because it's an ETF and they generally don't have as high IV rank as some equities. But with a 49% IV percentile, that's right in the sweet spot for me. So I sold some premium. I came right here and sold what was when I sold it, it was the 29 delta. It's now the 30 delta. The market has moved a little bit. And then I bought the 18 delta right here. So sold right here at the 35 strike, bought the 30 strike. So it's a $5 wide spread. I took in 160. I collected a buck 60 in premium. And this is I'm out in October, the monthly. And that's that. So basically, now if we go to the analyst, we can analyze this. Let's see. How about let's do it like this? Because I think it's going to have that call option in here as well. And I only want, so we take that off. We take that off. And we are going to set this to October 22nd and tighten this up. So you can see I'm gonna set this break even, set slices to break even right there. And then here you go. And you can see the premium I collected over here. If you look at the left corner over here, when I move this, you see it say 160. And so basically my break even is going to be 33.43. So I just need the market to, by expiration, to be somewhere around in here to make money. And probability right now is showing that I have a 60% probability of this staying out of the money within the next 39 days per se. In which what I'll do is I'll manage this at 50% and try to pull about $80 out of it. So that really increases your probability of profit because I'm not going to hold it the whole 39 days. So that's that. And I'll go into one of the reasons um, why I wanted to get bullish. We can look at the technical side of this. So for me, like I said, I got to up move, I got to pull back, right? So this would have been if I'm counting waves on Elliott wave, the way I count, um, the way I study, I got up one, back two, three, and then now we're in the fourth wave. So the fifth wave should take us above this high. And that's what I'm trading. So I do think so. A couple of ways you can trade this. I sold a put spread. You could buy a call spread, which I didn't want to buy a call spread because we have high premium. I mean, like it's a juicy. You can collect a lot of premium because of the high IV rank. Excuse me. I would rather sell the option because you don't know how long it could chop and go sideways, and I don't have to necessarily be directionally right. I just needed to stay around in here, and I need vol to contract at the same time, or time to just go by and have theta decay. So that's why, excuse me, I would prefer to sell the option as opposed to buying it. But you could buy a call spread. You could do like a leap option, buy something like further out instead of doing 39 days and giving it time. Maybe come out here 95 days, and that next high was what? What's that high right here? 56. So maybe buy the 55 call option for $5, right? And if you can get this in the money, I would say within the next 30 days. And how I use the option chain to see how much money I would make on that. So if I bought the 55 strike right here, this 40 delta, and I paid, it got 460 bid, 5 ask, I probably would try to get filled at 460. Right. I'll probably come in under that because this is wide, this is wide bid ask spread. This is where market makers make their money on wide spreads. So me, let's say if you bought this, you say, how would I know how much could make? Let's say it went today or maybe even this week, it got to in the money. Where is in the money trading right now? Right around $1,020, 1020, 1040. So you could make now, let's say it took from today to this, let's say it took 28 days, because that's what it'd be approximately 95 days from this December option to November. Let's look and see what the in the money is trading for in November. Because we're what I'm doing is by using the option chain to show us let's do it like this so you guys can see what I'm talking about. I'm not going to show all the strikes. Let's do 14. Will that give me what I need? Yep, that'll give me what I need. Just barely. So now we got this one, and then we're showing that one. So I got December and November. I'm showing you how to use the option chain to kind of see how much your option will be worth if you're successful. If I bought this 55 right here, now and 28 days went by, and let's say it took 28 days for it to get to 55, what's in the money? Carvana strikes is trading for $9 to 950. So you could look to make double your money. If you paid 460 and let's say you sold it for $9, that's what? Almost double your money. It's 440 you'd make in profit. So somewhere in between 9 and 950, somewhere in between here. So that's how I use the option chain to kind of gauge. So if I was going to get long and just buy a call option, this is the call option I would buy. I would probably buy the 55 and I would look to get out of it. Give me 30 days to get to here. Now, if you want to look and see if it took longer, let's say maybe 50 days, and the money is trading for 690 to 710. So if you paid 5 for it or 460, you can make 690. That's about 230 bucks. So I wouldn't buy shorter dated because when you buy a call further out like in time, it doesn't decay as fast. But when you buy, if you were to buy this one, then it's going to decay very quickly. Or you buy one right here, if you buy like a weekly and within that week, that's more almost like a day trade. You need that move. You need to get the move you want that day. And since the market was already up, I was like, I don't want to be in a call option that short dated. I'd rather sell and have time on my side. So that's what I did. And so at this point, we're just gonna see what happened. Um, Now, even if it does come down here and piddle around this area, I'm cool with that. I have time, for it to come back up. And this gap is gonna make, I think anyway, will form as support for this particular stock. Um, let's take a look at now. There was some news on Carvana. Let's look and see what the news was on it. I think it got an upgrade. So that's what happened. If you guys, I don't think you can see that on the screen. So let's see. Says Bazinga's top ratings upgrades down right. So basically, there was an upgrade on Carvana. I'm looking at some notes right over here. Carvana is grossly undervalued. Why this analyst says it's time to buy the stock. That's per Bearings. Um, and that's that. So basically, we got an upgrade on Carvana. Um, and that's why we got this gap up today. So that's your catalyst for the move. I went over the technical analysis of the move and I talked about different trades. Oh, another thing you can do that I do sometimes. If you don't want to do, let's close this up. First of all, before I go any further, guys, hit that like button, hit the subscribe button. Um, I do I'm giving out, like trades, going over stuff, and I don't think you got a few people that'll do it on the internet, but not a lot. Not without you paying them some money anyway. So please hit that'll help me out if you just hit the like button and subscribe, share the video. Now, the next thing I would do is something like a butterfly or a broken wing butterfly. So this is a way. So basically, I would buy like one in the money, right? So on Thinkorswim, if you see the purple, that's letting you know these are the strikes that are in the money, right? So I would come buy one in the money. Let's close this up. Then I would come and where do I think it can get to? So I don't want to make it that wide. Like if we came and sold the 55, sold two of those. So that's a what? That is a 17 and a half wide spread. So I would do something like maybe buy the 70. That's going to cost me 410. So let's take this 37 and a half and let's make it a 40. So now this is a equidistant butterfly. So it's 15 up on either side of my short strikes. and I will pay $3 for it. Now, this particular trade, let's analyze it real quick. Like, now I think I'm gonna have to take off I'm gonna come over here and click and take off the put spread, so it's not showing. So only thing we're showing now is this butterfly. Now the thing about this butterfly, if we look at it, it should be, let's set slices to break even. All right. So now if you look at this, let's see, probability in the money. I'm changing this in the money because I want to see. So we want to try to pin this somewhere. Now we got to get the direction right, obviously. But this particular trade, you got to be directionally right to make money. If it goes down, we lose the full $3. But the max profit, because it's a $15 wide spread and we paying $3, is $1,200. So you take the 3 from the $15 wide, that leaves you with 12, max profit of 1,200. I wouldn't try to pin it or get all of that, but because I'm not gonna hold it to the end. But what you can do is once it gets up and around this area, you can look to close out. So once it gets into this area, you can look, and you can see just by today. Let's say it went up there, which it wouldn't, and and move $20, and the rest of the day you make $159. And now each day, now if I come and day step this out, I'm gonna put 4 pay graphs on there, and as you can see, each one, look at the dates. Let's see, I move it by 8, and you can see. Let's move 9. All I'm doing is increasing the time. So look over to the left of the screen. You'll see 4. These 4 right here are showing like the path of the movement of price action and how much you would make by that day. So if we held this to October, let's say it took to October 2nd to get to our price of 55, our short strike. By October 12th, we'd make $471. By October 2nd, we'd make 304. By October 22nd, we'd make 11. If we held it all the way to, let's see, is the 22nd, well, actually, we would have to close it out. It would close on the 21st. So you can see, I'll bring this down to 9. That'll make it better. So by October 18th, if it was right around this area, you can make $700. That's a good trade. Like and I like to do. I actually like this one better than my put spread. I actually like this one better than the put spread that I have on. But I already had a put spread on, and I don't want to take it off. I think it's down a couple bucks right now. So, but sometimes I would do this and try to pin if I'm confident on the direction. So that's another thing that you can do, right? Just the equidistant butterfly. Now you can break the wings if you think it's going to run through this area, and you'll still make money as it goes past your center strike. But I like, in this particular case, I like this area right here, and then I would set an alert on alarm for right up around 55, and then I would get out as soon as the stock hit that area. I actually do think it's going to break through this high, but anywhere up in here, you're still going to make money. So with that, guys, also, I did do a video on prize picks. I will have a link in the description. If you check out my prize picks video, basically another way of doing fantasy football. I hit my first bet or whatnot. Bet 25, 175. I picked Jameis Winston to throw more than 225.5 yards. He did that, and then they gave you a freebie with Tom Brady. So bet 25, win 75, pay out 3-1. I'll be doing another prize picks where I'm gonna go over my pick on who I got for the next week. So make sure if you are in the fantasy football, make sure you definitely stick with the channel, because I'm gonna be doing some more stuff with fantasy football, probably when basketball season start, and maybe even like some WNBA stuff if they have that on there. I think they do, and college football as well. So with that, guys, I'm gonna be out. Peace.